But in terms of, I suppose, that the macroeconomic conditions, and you are dealing, or you're talking about the structural impacts, do you expect there to be any kind of major delinquencies, perhaps not to the extent of the GFC, but just in terms of perhaps people aren't necessarily able to meet their payments? And you've also got a situation where you mentioned the rental market, where you've got, rental vacancies incredibly low, so people are having to pay more in that respect. You look at some of the data on the commercial side, SMBs are struggling with rental delinquencies of their own. So do you see any kind of risk emerging there that's going to be significant enough to have a substantial impact on the broader market?
So we're not really anticipating a large credit crunch in the housing market because of the very high credit quality of of those who have mortgages today. What we've seen in the last 18, 24 months is that, last year, you could get a mortgage for 3.5, under 4%. That has really skyrocketed to that 7% range we're looking at today. And so you saw a lot of people being able to buy homes, and the credit that they were underwriting at that point still very strong. The labor market in the US is still very strong. So it does seem like from that perspective, the consumer is in a fairly good place where we're not anticipating any sort of a credit crunch in the housing market in the same way that we saw effectively that risk really kind of, really blow up in the GFC. So we're not really anticipating that, in this cycle. And the other aspect too is that in terms of just the buyer pool that's out there today for single family homes, it's fairly great in terms of even the investors coming in. You've seen investors coming into single family rentals. There's some large platforms that are being formed, and there are other kind of demand drivers that would be able to absorb any sort of issues that you see from the consumer standpoint. But we don't anticipate, because of that structural supply demand imbalance that we see in single family homes today in the US, we're not anticipating any sort of a large financial risk that's more broad-based this time around.